But I would simply say that when you have the head of the IMF come out and say that China is well understating the amount of gold that they're buying, when you have, the import export data, when all the banks are going through, I think in the UK, they have to use the banks or whatnot to go through the export data to the refineries, or to the end user. It shows that China did not stop buying for 2 months in a row, as we knew that they didn't. And it's interesting, they turned down the premium on the Shanghai exchange for gold, not on silver, but make the West price slightly higher than Shanghai to make people think, yeah, they stopped buying gold. Yeah, that's real. But they didn't. And look at the effect that it had. But here we are, right back up again. So yeah, I think this is a trend that will continue until something breaks, and then it accelerates.
In 2021, Adam Lipinski, the head of the Polish National Bank, issued a stark warning. Gold is the only asset that will retain its value even if the global financial system collapses. But here's what they didn't tell you. Central banks in countries like Poland, Turkey, and China have been quietly stockpiling massive amounts of gold, all while downplaying their true reserves. This isn't just about hedging risks. It's a calculated move to position themselves at the top of the global economic food chain. Andy Schectman exposes how these central banks are manipulating the narrative, keeping the real numbers hidden, and using misdirection to accumulate wealth without sparking a market frenzy. They're preparing for a financial crisis that could collapse the US economy and potentially reset the entire global financial order. Could this be the ultimate play to shift power away from the West?
Talking about Turkey and India and Poland being at the top of the food chain in terms of purchasing. And it was when I heard that, I went back through some notes that I had maybe a year ago, 2 years ago. And it was in 2021 that the head of the Polish National Bank, Adam Lipinski, and he said, he was talking about why they were expanding their gold holdings. He said, gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Of course, we do not assume that this will happen, but as the saying goes, forewarned is always insured. And the central bank is required to be prepared for even the most unfavorable circumstances. That's why we see a special place for gold in our foreign exchange management. Of course, in that article, I think they talk about the head of the Dutch National Bank, who talks about if there's a financial crisis and price will skyrocket, and the official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. So when you talk about the central bankers, they know the playbook, and that's the truth. And I think most of the numbers that are reported in these central bank holdings are massively understated. But that's okay. It's still quite obvious that they are the ones that have been leading the charge in gold's rise. I don't know how much investor demand really factors into it in North America. I really don't, because quite frankly, I've never in 34 years seen a period of time where, anything more than 1% is invested in metals. And as Rick says, it's a 0.5% or less. So what happens if it's 5% or 10% or an allocation on average of 10%? Is that really that outlandish when all hell is breaking loose? Well, that's a 20-fold increase then, if Rick is right. So what does that do to the supply demand numbers? What does that do to the availability? This has been an industry where getting product for many, many times in my career has been very challenging in a period of time where, no one's buying it really. So yeah, I think it's interesting. This is misdirection. The smart people misdirect everyone else with rhetoric, with price, and with what's happening in other markets. And at the same time, that leaves them unfettered access to accumulate without being crowded out of the trade, without being outed, if you will, for what they're intending to do. So yeah, those numbers, I bet they're much higher than what they say. It's like you and Vince talking about the silver concentrate in Doré that has been purchased in Latin America. All of that has been done so as to not trade off of an exchange, to not move the price. How much of that is done around the world in gold and silver? I don't know. But I would simply say that when you have the head of the IMF come out and say that China is well understating the amount of gold that they're buying, when you have, the import-export data, when all the banks are going through, I think in the UK, they have to use the banks or whatnot to go through the export data to the refineries, or to the end user, it shows that China did not stop buying for 2 months in a row, as we knew that they didn't. And it's interesting, they turned down the premium on the Shanghai exchange for gold, not on silver, but make the West price slightly higher than Shanghai to make people think, yeah, they stopped buying gold. Yeah, that's real. But they didn't. And look at the effect that it had. But here we are, right back up again. So yeah, I think this is a trend that will continue until something breaks and then it accelerates.
Continuing the discussion, Andy Schectman highlights a significant shift. Central banks around the world are quietly moving towards a gold-based monetary system, a move that echoes the historical gold standard. Once dismissed by modern economists, nations like China, Russia, and India are buying up gold at unprecedented levels, signaling doubts about the long-term value of the US dollar. Even India is testing gold-backed government bonds, with experts suggesting that a 30-year gold bond could outperform all global stock and bond markets since 1971. This rare pro-gold sentiment, even noted by Forbes, suggests a looming financial revolution. Are we witnessing the early signs of a global economic shift?
If this is really true, where they are trying to misdirect, they are trying to accumulate, it wouldn't do them any good to be forthright about their accumulation. It wouldn't do them any good to be very honest about it. And especially if we revalue gold and it underpins a new system. I mean, it's funny because no one talks about, how much gold does the US have? Where did the gold go from the Ukraine, the 12 billion that they sold? Where did Gaddafi's gold go and his silver? Where did Hussein's gold go? I mean, where did it all go? Do we have it? Did we confiscate it while we were there? Are our numbers right? Who knows? We don't tell. So to expect any of the numbers that these central banks are telling, it's probably all fugazi, but probably much higher than what they're actually saying. Hard to believe, but the world is beginning to lurch toward a gold-based monetary system. It's exactly what you're talking about. He says this despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. You mentioned 1971 there. We had never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. However, the signs of changes are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, Russia, and a number of other nations, such as Poland. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And one thing that was very interesting was the comment they made about India. They said India last year began experimenting with gold-based government bonds. And this is exactly what Judy Shelton is talking about, who I think, if Trump wins, will be the head of the Federal Reserve. She is advocating for 30-year bonds backed by gold or redeemable in gold. And the article says monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It's Bad, and How to Fix It, observes, these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed all stock and bond markets worldwide. And so when you talk about, what you just said is exactly what Forbes is saying, and to find it in a Western-based publication is one of the first times in years that I've seen anything that is pro-gold in a Western publication that doesn't have a yeah, but. There is no yeah, but here. In fact, they end it with Zimbabwe, which must hold the record for hyperinflation, recently announced the launch of a new currency fixed to gold. Deep skepticism is warranted that this government has the discipline to make such an argument work, but the move is a sign of things to come. So maybe people are waking up. Maybe the elite are waking up. And when you hear Senator Loomis from Wyoming talk about funding this Bitcoin strategic fund by revaluing the Fed's gold, I mean, you're hearing the word gold and revaluing and more than I ever have in my career from Western entities. And, maybe the public wakes up, but this is why so few people succeed in investing, Chris. And as an options trader, you have to understand that. And they follow the herd. It's the herd is yet to catch on. There are a few stragglers who are waking up and haven't woken up the herd yet. But when that happens, things can get very crazy. But to see this in a Western publication like Forbes, I found it to be enlightening and actually somewhat for me, I was somewhat optimistic that maybe indeed there is a gradual shift to a different way of thinking instead of recency and normalcy bias.